current events are irrelevant to your long-term investing success. I don't care how old you are or how long you think you have left on this planet. Your investing timeline is long-term. If you need money right now, next week or next month, that's not an investment. If you need the money for something in the next 2 to 3 years, that's not an investment either. That's park it in the garage money. If your timeline is 3 years or longer, well, that's a long-term time horizon, and then we can talk investments. And who doesn't have a long-term timeline? Nobody. I say nobody. Unless you know God is sending your last Uber driver on a given date, you don't know what your checkout time is. If you're 100 years old, who's to know you won't hit 103? If you're 85, 88 isn't that far off. If you're 70, you're not even nudging your life expectancy. And remember, those life expectancy numbers, those are averages, and you're not average. Half the people live beyond that age anyway. And if you're 60, come on, man, you're just getting warmed up. All that to say, relax, chill out. You've got time. This is but a season in a career of investing seasons. And it's not that unusual either. Pullbacks, corrections, bear markets, they're all part of the deal for investors. And if you're chronologically younger than 60 and still accumulating assets in 401ks, IRAs, Roth IRAs, you should be salivating anytime the market goes down. It's a season of opportunity. Everything is on sale. Your regular paycheck or monthly contributions, they're buying more shares of America's and the world's great companies when they're on sale. You should be celebrating when the market goes down.